Rate cuts, tariffs, and AI. What's next? So, despite a last minute end of the day surge, markets opened the shortened week fairly cautious at all time highs despite lots of uncertainty. As we mentioned in our recap last week, not a lot is expected this week compared to the last few. So, it feels like a good time to take inventory of some of our bigger 2025 market themes. So, first, rate cuts. By now, it's old news that they're now on pause. The Fed sees a stabilized job market and healthy economy, but is starting to grow a bit nervous with the sticky inflation. As we saw last week, inflation appears to be inching back up in recent months. At this point, though, we see the resumption of rate cuts unlikely until fall at the earliest. This mostly aligns with market expectations, but maybe a little bit more pessimistic. Current rate cut expectations has a two-thirds chance by the July meeting and almost 100% by September. The two main factors we're watching here is the inflation progress over the next few months and the mindset of Fed officials. Basically, what and how much do they need to see to regain confidence in the progress? Next, tariffs. The initial round of tariff drama appears to be over for now. If you're keeping score, we got into a bit of a tariff tiff with China, some broad steel and aluminum measures enacted, but mostly delayed with Canada and Mexico next month, and the rest expected in April. So the immediate impact was mostly delays, but we'll see maybe some near-term inflation from it. For example, some PC makers already announced 10% price increases to account for the China tariffs. However, a larger trade war appears for now not in the imminent future. We'll have to see though as Canada and Mexico deadline approaches next month, as well as what deals get made with the rest of our global trade partners ahead of the reciprocal tariffs promised in April. Also, we'll have to see how this impacts US trade longer term. Even just the threat of these measures creates uncertainty, and we could see trade partners look to reduce exposure to the US to minimize risk and volatility in the future. And then AI. DeepSeek shocked the AI server build-out ecosystem with a more efficient cost model. Our AI names have mostly recovered from the sell-off since the end of January, but this has been bolstered by big tech hyperscalers recommitting to AI servers build-out plans and even increasing expected spend like Google. AI continues to be a flashy buzzword for companies, but applications are still early and haven't yet proved any real return on investment despite the massive server spending. While we don't see as much impact to this year's data center spending plans yet, we do expect AI developers to have already started focusing on more efficient models, which could impact more mid to long-term spending plans. Anyways, rate cuts, tariffs, and AI are themes we'll continue to monitor throughout the year. However, more near term, we'll see if the Fed minutes shakes up any confidence this week or what NVIDIA has to say at its earnings next.